So everyone, welcome to the hotel transaction panel. Jenny, thank you again for lunch. And as an added treat, we get to hear your expertise on closing a deal. So this panel is particularly important as getting deals closed has really changed quite a bit over the past year. And the people on this panel all have different expertise in how to get the deal closed. So my name is Emmy, Hise. I'm the Senior Director of Hospitality Analytics for CoStar. CoStar is a leading provider of commercial real estate information, including hospitality information, when they acquired STR in 2019. I'm honored to moderate this panel, so let's go ahead and meet the panel. We're just going to go straight down the line, say your name, your company, and what you do to help get the deal closed. So we're going to start right here.
Bruce, we're going to give a microphone. Okay.
Just kidding. Can you do this?
Okay, can I sing? I could sing, right? No, I think Craig's going to sing. Hi, my name is Joseph Fan. I'm CEO of Broughton Management. We own and manage 45 hotels in California. And about getting deal close, I'm going to let the rest of the panel address that. Because at this time it's kind of difficult market situation, and hopefully they have better idea than I do.
My name is Keegan Bisch. I work with Stonehill. We're a direct hotel lender, and we have a lot of different products trying to get deals done these days. We can go anywhere in the capital stack. Where we do a lot of these days doing a lot of kind of short and midterm bridge loans. We're doing construction financing still. We're scaling up our perm lending for hotels. We're a PACE lender. We have pref and mezz and JV equity and everything in between. So we're doing all we can on the finance side to keep transactions going this year.
You'll go ahead and get that mic back.
Actually, Guy, your mic should be working.
It is?
Your mic should be working. Okay. I was going to say, COVID is officially over if we're all sharing the same mic. I'm Guy Maisnik. I am Vice Chair of the Global Hospitality Group at JMBM. We are a hotel law firm, and we specialize in hotel transactions. We've done about 125 billion of them worldwide, about $125 billion worth, about a little over 4,500 of them now. And so my particular area of practice is everything that happens the day before the hotel has to open. So acquiring the land, getting the entitlements, negotiating with the unions, negotiating with the hotel manager, getting the financing together, raising the capital. This year alone, we've raised over $250 million of capital for projects. So we do that as well. And so that's the space we're in. You heard from my partner, Travis Kamotz, and he does what happens after the hotel opens. He's an employment lawyer, and he deals with those issues.
Good afternoon. My name's KP Patel. I'm the AAHOA Secretary, the Asian American Hotel Owners Association. I want to say quickly to Craig, incredible event, and thank you for giving me the opportunity to address everybody here today. And I've got to follow in Jason's footsteps. Quick shameless plug. AAHOA Con is going to be right around the corner, right here in Los Angeles, April 10th through the 15th, the largest association for the owners in the industry today. Thank you.
Good afternoon. I'm Alan Reay, president of Atlas Hospitality Group. We specialize in California hotel sales, and we've completed just over $4 billion of hotel sales.
Is this one working? Mine doesn't work. Hi, Jenny Redlin. For those of you who didn't see me talk right before lunch, I'm not going to bore you with what partner engineering and science does, but I will tell you what I'm doing to help get deals done right now. I'm seeing a big discrepancy between what sellers want for pricing and what buyers want for pricing. So we've been instrumental in coming in especially on seller due diligence. I'm seeing a lot more seller due diligence as opposed to buyer due diligence. Because they don't want to get retraded on the back end, or they want to position their asset as best as possible. We're even doing like energy audits on the buildings on the front end and saying, look, you know, for this investment, you know, a small investment we can save you. I just did one in Yosemite, $200,000 a year in utility bills. Why don't you write that into this as well, buyer? And trying to get really creative on those different types of things. So I think that's how we're being utilized as the due diligence provider right now.
Hi everybody, I'm Peter Steigleder, President of Fidelity Mortgage Lenders. Hard money is sexy again, so I can use that term. We haven't really changed our underwriting guidelines when it comes to lending on hotels or independents. We don't care if it's a flag or no flag.
Yeah, I think
we don't
so.
care if you're in the room by the hour, by the night, or by the minute. In my case, it's 2. Yeah, sorry. Trying to line that up a little bit. We provide fast money so we can close deals
Hey,
in
there he
3 to
is.
4 days.
I don't know what happened. We had a few people that dropped off for
we have
whatever
private
weird
money. We're not a
reason.
financial institution, so we have
She's
plenty of money to lend
printing
out
one for you right now.
So we're starting to see a lot more deals.
Good,
that, banks
good.
are just turning
Yeah,
down.
been a good event.
We're a
Yeah.
little bit unusual in the hard money space because
Did
we
it
provide
print?
20-year fully amortized loans, 30 due in 15, or bridge loans. So we are a balance sheet lender, so we can provide long-term loans.
Thank you both very much.
Hey everybody, I'm Ryan Huntsman. I am with the and unlike hard money loans.
Did you guys bring resumes?
But
Okay,
we are
all right.
necessary.
Yes, I want one of each
So we're really
of
grateful
you.
for all the transactions that are still.
Oh, okay. Okay, great. I'm going to make an announcement about you guys. We'll get you in the room.
We greatly appreciate it.
No. I'm just going to point you out.
Thank you for the
I just want
introductions.
to point you
So
out and
now
tell
to set the
everybody that,
stage for
you're
hotel
interns here from
transactions.
College Hotel School and
Hotel operating
that, you've
fundamentals
got
are
resumes
strong,
and you're eager to
but
go
what's
to work.
causing concern
Okay?
is
That
the capital
work?
market investment side.
Okay.
We all know interest
My
rates are
pleasure.
up. It's
Thank
at the
you.
highest point in almost 20 years. Debt spreads are bigger.
HVS would be
As
the
Jenny
one for
mentioned,
you.
buyer and seller pricing expectations can
Okay.
be different,
Okay.
and hotel loans are maturing. I actually have a slide if we want to say it, but if not, I can just tell you the data.
But no,
So
we'll-
the national director of
I'll have
CoStar posted
Arnie-
an
as soon as I find
article
him,
this
I'll
week
tell
showing
him
the
when to
CMBS
bring you
loan
guys in,
maturity
and
for
we'll introduce you to
hotels
the
in the
audience.
U.S. by year.
Thank you.
23 billion of hotel CMBS loans scheduled to mature prior to 2023 were still outstanding as of December 2022. Of those, 79% were pushed to 2023. 11% were either placed on special servicer or were set to be paid off by 2022, and the rest of the loans were pushed to 2024. Of the loans that were pushed to 2023, 80% of them were originally due in 2020 and 2021 and are still being worked out. So this gives us some interesting statistics to know about the hotel transaction environment. But as I said, we're going to find out how to get these hotel transactions dealt by these experts here, whether it's transaction, extension, refinance, or construction loan. But to get started, let's take a look back first. So Alan, how did hotel sales in 2022 compare to previous years? Alan? How did hotel transaction sales in 2022 compare to previous years?
So in 2022, here in California, we hit a new record for median price per room, which was up from last year's record by 10%. So median price per room in California now is over $153,000 per key. In 2021, it was a record transaction year. 2022, we just finished our sales survey, and it's the second highest dollar volume on record. So 8.8 billion of hotels sold in 2022. What's really surprising is that we anticipated or expected in the second half of this year, because of the increase in interest rates, to see a decline in hotel sales, and that just simply didn't happen. The second half of the year matched almost exactly the same number of transactions that we saw in 2021. So what does that say? Buyers are anticipating, I think, inflationary pressure, and they are still willing to buy hotels in California at cap rates that are below now the cost of financing. That's something that we've never seen before. So tremendous amount of capital that's sitting on the sidelines, record prices being paid for hotels that are in travel and leisure markets. We're still not seeing a lot of action in urban downtown areas like San Francisco, San Jose, and Oakland. But overall, California is still a very, very strong investment market, and the median price as well as the number of transactions show that.
Thanks, Alan. And getting a little more granular, Jenny, how did your hotel transaction volume trend in 2022?
Sure. So our data is a little skewed because it includes the refinances, right? So because that's a big part of our volume of work, we were actually down 50% on transaction volume for us that we're participating in from 2021 to 2022. So again, I do think we don't exactly have the data on whether or not it's an acquisition or a refi, but in my mind, everyone rushed at the end of 2021. Ryan and I were, trying to keep up with the volume that was hitting the industry. First half of 2022 was fine, and then it was like falling off a cliff, or I often say that I'm still recovering from whiplash because of how quickly it stopped, right? But I do see some interesting trends. I do see that our SBA Green program, that has doubled. So there are some weird spots that are brighter. So that's interesting to see.
Thanks, Jenny. And Guy, what are keys for you to get deals done in the current economic environment?
Well, it's a different environment today. If you went to a distress conference, 5 years ago, it would be the most depressing thing you've seen. It's like a bunch of undertakers upset because no one's dying, and because there was no distress. And usually distress starts to happen on the percentage of work that we have. So while we still have a number of transactions that are going on, and because they're in the pipeline and capital has been made available, they're entitled, there's momentum. We have about 20% of the transactions that we have been doing over the last 10 years are in distress. DSCR covenants are blown, LTV covenants are blown. If it's with a bank,
on the friendly skies
moving, they don't want to extend, they don't want to pretend, they don't want to
Kahala
modify, they don't want to foreclose, they don't want to do anything. They just sit there until something works out. But private equity will come in and make a difference. So if you're getting a transaction done today and you see property, or you have a transaction that you have in mind, the key really, and you heard it earlier, is get all your due diligence done and have it be accurate. It's a much more segmented market that we have today. It's a highly specialized market. The legal rules have changed. There are much greater specialties, and so you have to have the buyers and sellers absolutely have to have the right team. And you can't gloss over anything because the capital sources will not gloss over anything. They will find the problems, so it's really incumbent on buyers and sellers to make certain that they find those problems up front.
Good.
Thanks, Guy. So I've heard differing perspectives of transactions being down or up, and a lot of it's related to the interest rate hikes or the buyer-seller spread. But Peter, what do you think that the effect of interest rates have on sales?
I think interest rates go up, your source of capital gets more expensive. Sellers got to realize they got to cave in a little bit here. They got to feel the pain. Sometimes it takes a while for sellers to feel the pain.
Right, and we've got another show
get emotionally
broadcasting.
attached to someone who think they can still hang on to these higher pricing points.
And maybe one in the ballroom,
get the
or where that
transaction
table
done.
is.
I think things will hopefully change. We'll get more transactions done.
Yeah.
Thank you. And Joseph, with the high or asking prices, higher interest rates, how has that impacted how you underwrite a hotel?
In the last
here,
I would say 12 months, we have
after the
2
break,
hotel transactions that we
and,
sold and went
2:30.
into
I
tender
wanna
and
do
exchange.
something
And both of those
Okay.
deal ending
Hi.
up where we ran out of time to identify hotel
We'll
to
be here.
purchase.
Yeah, yeah, we'll be right
We have
here.
probably about
Hi,
50,
Greg.
about
Nice to meet
50
you.
hotel
Pleasure.
for sale that pass through our desk, and we have in-house team that kind of go through it. Everything we
Very
looked
cool.
at, it was, I had a chance to talk to Alan Ray a little bit out there. The asking
Yeah.
price of these
Construction
hotels
pipeline, you
is
gotta
still
love.
a 2019 number or higher. People, the sellers still think they have something really, really great.
That
and
slide
I
deck will
don't
be up
fault
on the
that that.
website
We always see our
probably
hotel like
end
our
of
kids,
next
right?
week.
We love the property, and then
Yeah, yeah.
and then compounding by
Yes.
interest
Yeah.
rate.
Yeah, that'll come
so
to you.
for
That'll be an email from
owner
me or
operator like
Arnie
myself,
to you.
we kind of looked at our interest expense last year and this year, just to give you a rough number.
So that'll come out. Thank you.
2021 interest rate versus today on the difference each month. Just my company loan is $1.8 million a month. So all of a sudden we're like, oh my gosh, labor rates high, everything's expensive. We won't get into the bacon and egg, how much that costs you guys. And again, everything is very, very expensive. So we're having a difficult time to pencil something out. We're seeing hotel being sold or new build around $500,000 of room, and average rate 150 to 180, occupancy 70. If you're 80, if you're lucky, if you're Northern California, you're at 50 or 60. You can't pencil it out no matter what we do. So is it a prior ownership? So we're always thinking, well, if my kids want it or my wife want it, let's go buy it. But
Pardon
this
me?
is
Yeah,
an
yeah,
income
I do.
property, so we
Now-
can't get our head around that at this particular moment. So that's kind of where we're at.
We're gonna try and go live as close to 3:30.
And I know that some hotels have
Yeah.
used their
I'll
reserve
bring
for
that other mic
replacement to
over,
pay off debt,
and then-
and therefore haven't been able to deploy the proper capital to
Okay,
keep the
all right.
upgrades. So in these transaction environment, has there been issues,
Yeah.
Joseph, with the transfer
Yeah,
PIP
so what I'd like you
requirements
to
by
do,
brands when you're
when you
underwriting?
find your guys.
I know we have
Here at this
quite a few. You got
almost
IHG, you got
50,000
Hyatt, you got Marriott in this room, and I have all the brands,
Yeah.
so I'm not harping on them. And the problem with these PIP, I was sharing some of my PIP number. I looked at my next 24-month PIP. I'm at $118 million PIP. It is. We're currently doing the DoubleTree Sacramento. That's at $60,000 a room. We're doing the Ventura Holiday Inn Express. We're at $54,000 a room. We're doing the Hilton Concord. This is PIP that is coming. It's almost done. We got Concord Hilton at $34,000 a room, and it is so expensive. We're joke about it. We'll buy a hotel for $10 million, and the PIP is going to be $10 million too. So again, on top of the high interest rate,
Send it to
the
me. You got my
high
email,
cost,
don't
it
Oh,
is
it's not.
very, very
Yeah,
difficult
love to
to
see it.
pencil on underwrite. But I think to try to
Good.
get the deal done,
My
if
pleasure.
you're in 1031, you have
Hopefully
to
we'll get you
find
some more
the right
jobs.
location. So at this particular time,
trying
as a
something
company,
together
we're looking at city
Andrew
that's
and I
not
are
really growing,
relaunch California Credit,
and
and we're
kind of
gonna go
like
out and do a little running.
we use this example. I just sold the Palmdale Holiday Inn. So we look at Palmdale. Okay, so maybe we'll move that money into another city that is growing. The spread on the hotel is so thin, then it's no longer an income property play. It's more like a real estate play now. It's always been a real estate play, but the focus is more on that. And so that's kind of where we're at on that. Closing, we got a bunch of lender, due diligence company. I think if you're good, your hotel has a good track record, I think both lender, the brand, they're behind you. I think you get things close. Is can it pencil out? Are you going to write a check every month to feed this thing? I think that's where we're at on this.
Thanks, Joseph. So we understand that underwriting is a little more difficult, a lot more difficult in this environment. But Keegan, what options are available these days for those who are coming off construction loans or maturing debt?
Yeah, I think, I mean, we're seeing we're starting to see more of it with certainly the maturities coming up, also a lot with rate lock renewals. Those coming up are extremely expensive. And so again, I mean, a lot of owners are dealing with, you know, they had a 4% rate, and now it's double that in this market. We have been doing a lot, probably for the past 9 months, been doing a lot of fixed rate bridge loans. You know, those are kind of a 5-year fixed and prepayable after 30. We've also been doing more 5-year perm loans as well, both for those coming off, you know, either some of these maturities or coming off their construction loan.
Where's the monuments?
But I think right now it's really, for a lot of the groups, it's finding fixed rate, obviously, just in this market, and then having some of that flexibility. I think most people, you know, believe that rates are coming down in probably a few years. I think we're over the idea that it's coming down this year, but you know, so I think finding something that's a little more midterm, giving them some flexibility to pay off and refi when hopefully we're in a better interest rate market.
David.
Thanks.
David.
Now switching gears a little bit to get a little more local. Ryan, you close transactions in all states. What should investors know about California transactions that could be different than other states?
Yeah, this is the award.
Anybody who, as an investor, owns a property here in Los Angeles.
I'm having one made. It'll be post-conference, so this one goes in your office. Send me a picture once you, yeah. So let me know when it's in your office. Shoot me a good high resolution.
We do it against that smoke glass with our logo.
Add into every recording for every document we record that does not have
So
transfer tax. So,
I'm going to hand it
that's
to
been
Roger.
revenue that's been going into the kitty for
I'll talk to
couple
Roger
years
before
now, and
we're
I
all
think
up on
we can all
stage. Let
attest
him know
that
that his
homelessness
is
is
coming.
getting worse. And that's what happened. Now, if you're selling an asset, again, over $10 million, after certain increments jump up, the mansion tax.
So the other winner is the
And that's, you know, one
Stanley
of those
Hotel.
couple of external
Stanley
factors that are still
in
keeping
Napa.
transactions going.
It just opened. Beautiful
Luckily for
hotel.
us, it keeps
But
us
it's luxury.
employed. We didn't have to
not-
go to exchanges.
Oh, that's
or
that
needing to get away
same
and just
high-end
afford this mansion tax.
group. Ah, damn, their name begins with an A.
Thank you for bringing up the mansion
They're not
tax. And
making
for
it
those
down.
of you who are
They're
unaware of
opening
it,
another
it
hotel
takes
there.
effect on April
So,
1st. And
we're
any
gonna run their video on the
transaction, commercial real
Accept it on
estate
behalf of
above
Mountain
10 million will
Valley.
add an additional 5.5% tax onto the transaction. So just a little background there. KP, I want your opinion on this. What do you think that the mansion tax will impact on investments in Los Angeles?
Yeah, it's in the system.
Well,
So
I mean,
AV will bring it up.
the mansion tax in general starts at $5 million
just so
at
that you know, it'll be on
4.5%.
two
And then once
large
we get to the
screens.
$10 million
There's also a
threshold,
monitor
it jumps
down
up to
on the floor pointed at the
5.5%,
stage
right?
along with a clock. And you know, Bruce
It's an
Ford.
unintended consequence that it's actually, in my opinion, going to affect more smaller business owners than anybody else, right?
You
If
know
we take a
David
look
Lonnie?
at LA City just itself, and we're going to keep this hospitality related, right? What can you actually buy for $5 million in this city? Forget the city and the state today. Who owns majority of those $5 million properties? It's the smaller 30, 40, 50 unit properties in this town. And who owns a lot of those? The mom and pop owners. You know, I've got made my business on those smaller properties. A lot of owners today are still owner-operators that had come over from India not so
Bruce
long
will be
ago, put
up
their
there,
families
Glenn and I will be
through
up there as well, and
school,
we'll throw
got
some
them, the
questions
kids
at you
well
guys.
educated, are now looking to exit the industry. They are now going to be hit not only with this additional 4.5 to 5.5%, you're also going to be hit with capital gains tax, right? So speaking to a couple of my broker buddies, it's just another line item that we're all going to have to negotiate
Hopefully
between
they
buyer
are.
and seller. And if there's any REITs or investment companies in here, I do apologize. I don't honestly think it's going to affect them as much. But please understand, as an AAHOA representative, a lot of our members are the ones buying the smaller assets, the $5 to $10 million properties that trade.
But
Majority of those properties trade within our membership than anywhere else. And we are going to start feeling that pressure on how we're going to be able to get these deals closed as well. Prime example,
gonna be
a buddy of
done
mine calls me and says,
hopefully
KP, I cannot get financing because I'm at 1.35 ratio now. What do I do? He literally had to inject more cash into the deal, right? We're struggling in California to make sure
Go to a
properly
quiet
cash
corner,
flows.
and you
So
can jump
one
on
word
the
of
phone
advice
for a
I
while
can
and
give,
jump off.
start now. There's a lot of people in these rooms. Start
like
building
that
up that
idea better.
relationship with your banker, your lawyers, right? Start understanding what it's going to take for you to be there when you want to go ahead and make your first purchase.
Thank you.
Thank you.
I think a lot of people who are in hotel investments or the hotel industry, it's because we all love hotels. I work for a commercial real estate company, and I feel fortunate that I get to talk about rooftops on hotels versus industrial warehouses. So we're in a fun industry. But Ryan, what makes hotel transactions unique for hotels compared to the other commercial real estates? Just to remind why we're all happy to be here.
Kind of like Joseph had said, for a while they would underwrite the business. And now they're more so underwriting the real estate. And with our transactions, we have to look at it as a twofold transaction, the sale of the business and the real estate. So in our world, we call that a bulk sale, and that does take a specialized person. And then, you know, if you have a construction loan, that's a whole other bag of underwriting criteria, which can be brain damage. But, you know, we just continue to add different layers and disclosures and everything because of things going wrong and lawsuits. So, you know, we have to protect the lenders via our mechanics lien underwriting. And it can be a bit of brain damage for the owner, but it is necessary for the protection.
I'm throwing a question out on the list here, but are you guys finding more people interested in hotel investment that hadn't previously been interested in investing in hotels? Are you guys seeing any of that?
You're definitely seeing some people get away from the lower cap assets, right? There have been apartment buildings trading around here at 3 caps, 2.5 caps. It's hard to understand if it's not for depreciation or an exchange. So yeah, it is becoming more appetizing, and we are seeing more hotel sale transactions. It's kind of following industrial has probably been the sweetheart of California, especially what's been going on, you know, in the Inland Empire. But we're definitely starting to see more and more hospitality transactions.
Anybody else?
Yeah, I can speak to that to somewhat. We have a large family office practice, and these family offices have significant amounts of capital, and they traditionally, at least the ones we work with, had not been buying hotels. They are now looking at them, but they, you know, again, has to have a story, has to have a high barrier to entry, has to be something that can't be easily replicated. And then, of course, sponsorship has to be just absolutely solid. And those assets we've been charged to, you know, help them find.
There is.
And so they like the inflation hedge of a hotel.
Spring Hill or a
so
Courtyard in Boise, you're actually
Plus,
in
you know,
Meridian.
it's kind of a tale
Drew's
of many
company
different
runs it.
cities. Because in some
So if they
areas,
want to go to
you know,
Boise,
resort
Idaho,
areas,
get
those
married.
rates are really high. You know, if you want to go up to Napa, you know, good luck. Just empty your pockets.
Yes,
And
Dev Patel.
so some of these
See if I can
really
find
nice areas that are great for resorts.
He's also
they are
got a
very
beautiful
interested
little
in buying
boutique
the
down in
hotel
San
asset is
Diego.
unique. Plus, they do have a lot of cash. They like the idea, as Joseph mentioned, they like the idea of putting it into the land, letting it
See
sit there
that
for a
gentleman
long
right
period
there
of time, and let
with his
the
fingers
cash
on his
flow,
mustache?
work
That's
in
Dev
those kinds
Patel.
of
Yeah,
properties.
he's the one you want to talk to.
The big change that's happened in California over the last 2 years for hotel buyers, or new hotel buyers, are alternative use. So the government has bought up, I think, over 120 hotels to house homeless people. And we've now seen a huge jump in buyers purchasing hotels to convert to apartments and low-income housing. And that's something that over the 30 years in this business, I would get a call once a week from someone saying I wanted to buy a hotel and convert it to apartments. And I said, okay, if you can find out which city is going to allow you to change the zoning, they're going to give up the transient occupancy tax.
About 4 o'clock.
and
Hang on a
allow
second.
you to
I
just do
gotta.
apartments there. Then once you
Sorry, I
find
didn't know
out
where
who
you
that
guys
city
went.
is, I'll find you a hotel. And ultimately, I never heard back from them.
No, we'll end
That's
it early.
changed because of the pressure that's on cities
We're gonna-
now to
we're gonna
provide
have them up on stage for
low-income housing.
Maybe 10 to 15 minutes.
And it's
Probably.
also with Project Home Key, they don't seem to have to go through any of the zoning requirements, and
Not that I won't, but I'm
that
just feeling
is
like it's going to be too many.
sort of taking out supply
I'll stay off the
of
stage.
additional hotel rooms in California right now.
Yeah.
Good.
Well, I think the best, I think the
This
best
is a little
solution
bit
is
off,
each
but
ask one question.
I've
Yeah,
got
let's just
buddies
see.
in the industry that actually are not a part of the industry that now want to invest in properties with me because they actually
think
do
that might
business on
be a little
Airbnb with their
dangerous.
apartments and houses.
And we're only gonna
feel
pull
like
out the one
if Airbnb
for,
can do it at this scale, they want to now actually get into the hotel business to make it an
Well,
actual
come here and I'll show
hospitality
you.
industry for themselves as well. And I have to let them know that unlike Airbnb, we're regulated. So doing business is not as easy as it is on Airbnb, but we are seeing some new wave of people coming in after the introduction of Airbnb and VRBO.
Well, here, I have something to add. Like everybody in this room loves hotel, and I love hotels. And we actually crunch out these numbers. Some
Yeah.
of you know we own about
Max.
15 apartment buildings, and we actually have one opening up in April this year. If you, before the cap
gotta stop
rate
by
on
and
the
be on the
apartment
show.
buildings, they're around about 3-4%. A hotel runs about 7 or 8%. If you're giving their
there's
both
the
all
LE
real estate
logo.
property. But if you're taking the PIP
Yes,
into
very much
consideration,
so.
the PIP reserve and what you need to do with this new rotation in 7 years and 14 years. Soft good for 7, case good and all in 14 years. Actually, the hotel cap rate from generally we calculate it dropped down to 2%. You know, to 2%. KP agree with me? So,
True numbers.
But every time I walk into, we have apartment building in Westwood, Brentwood, and Beverly Hills. I walked in, I'm like, yeah, okay, you know, it's nice, and people paying the rent. Versus I walk
Nice.
into my Holiday, my Marriott.
Okay, what we're gonna
or,
do is I'm
my
gonna
Hilton.
leave
It
the
puts a
one award
smile
in the
my
box
face. I
and just
love
take
it.
the
I
one
just
that we're
think
actually have the
we're
ownership group
creature
here
of
for on stage.
People
We're
to
probably
people
gonna end that a
interaction.
little
I
early.
just came off a
and
Marriott
then,
board
you know,
meeting,
kinda
and we're
roll
all
through
scratching our
everything
head a
else.
little bit.
Done.
Do you know the
Between
mobile key you
3:15
guys get?
and 3:30.
Everybody know mobile key, right? And all the checking on mobile key is the survey is losing points, and they can't figure
you
it
get
out
them
why.
setting
It's more
up the bar
convenient.
at what
but
time?
It all comes down to people want to talk to people, and
Yeah,
we
have it ready at
get
3:15.
senior that
Thank
come
you.
to stay in our hotel.
You had another
because
question?
they want to
Okay,
talk to
did you talk to
somebody
Deb?
during COVID.
Okay.
Their apartment, they're bored. But anyway, that's
He's
what
a
we're
good guy.
We're gonna get more
But he's got
people, and
assets throughout
KP
LA.
I'm from
Things
Taiwan.
get
You know, I got a bunch of
Orange
Chinese
County,
friends,
San Diego.
Korean friend. I know all the Indian friends. They just do hotel. I'm not sure. Like all my Indian friends, I say, "You're in hotel, right?" They go, "Yes." And you're a AAHOA, they go, yes.
Yeah, Pacific
But I
Hotels
think it's a
would be
passion
another
we
one.
have. Otherwise, after
just
COVID,
took
trust
over
me,
a place in
we'll
Newport
be
Beach. Used to
doing
be the
like
Best Western
housing or
on
something.
Pacific Coast
It's-
Highway,
hotel's
just
been
before you
challenging,
get into
and I think
Huntington.
safe to say,
let me talk
Alan
to
and
Steve
myself,
Patel.
we have hotel in our blood. There you go. And same with Craig.
Yeah.
Craig too.
Yeah.
Thank
Yeah.
you.
So,
Thanks. So now I'm going to switch gears a little bit to talk about construction loans. We heard
Well,
this
that, if you
morning
just wanna
that
do really
the
outstanding
pipeline is
Italian
pretty
food, you
strong.
got outdoor dining,
Also, the
George Louis
cost to
on,
replace is lower. So
Luciano's
Keegan, what
down
are
at
the
Dana Point.
hotel construction financing? What's available right now for hotel construction financing?
Hands down, he's got the best.
Yeah,
Italian
I mean,
food.
it's really limited right now out there,
That's
just
always
with
my go-to place.
construction costs are
Take
still
somebody for a while,
very
it's like,
high.
that's where we're going.
Banks are
I get a
for
little
the most
bit of
part out of the
everything.
market
I
on
George will put
hotels
together a menu
and
for
probably
me.
on hotel construction
I'll
as
have a
well. If they
bottle of
are still in it, it's
champagne
generally going to be at kind of
table
40,
by the time we get
50%
there.
of cost, much lower than it was,
Chocolate
and
covered
probably
strawberries or
recourse as
something
well.
else for dessert. It's awesome.
We are still we've closed some construction loans. We've got some more in the pipeline and
Now,
planning to
it's like
do
you go to McDonald's,
quite a
it's
bit
like,
more this
see ya.
year.
Bye.
It is it's definitely more expensive than it was, but I think it is the groups that are still doing it are looking more long term at it. I think
Really?
it kind of cuts both ways. Where the supply is definitely more muted. It's going to be harder to get
if they can serve
hotels
a
out of the
dog food,
ground
they
in
will.
general.
Okay,
And so
yeah.
if you are delivering in a few years, if you can pull it together,
enjoying yourself?
those groups that really
Good.
believe in their projects and want to see them happen now, we are financing those, and And so there is still some financing available, but it's definitely more limited than it's been.
I'm just curious, how are you dealing with the takeout after?
Okay.
How is that getting addressed?
Yeah, I mean, especially in California, I'll say, I mean, where rates are now, it's not necessarily going to cover really well or pencil very well on the underwriting side. I think both from, I think that's why you're seeing more. It's going to be more debt funds. It's going to be more, unregulated groups that can look at it more as, an overall real estate plan, not simply kind of checking the box on debt coverage. But I think in general, it's also, the expectation that we will be in a different financing market in a few years when these actually deliver. And so I think both the lender and borrower are somewhat, going in with that same understanding. So.
I mean, we've done some takeout on construction, but I'm gonna have to sidetrack a little bit and go to apartments because we just took one out 100% vacant. But we could do the same thing on a motel or hotel. We cross collateralize. We've done some stuff where, seller, not on a construction, but seller carryback, but on a construction, we've done a deal where we actually took $2 million worth of, we gave them $2 million against $4 million worth of Tesla stock as a stock pledge. So we get really creative sometimes in trying to raise up our leverage because we are 50, 55, maybe 60%. We have to get creative on how we can get a transaction done. And, maybe we'll take a first on their firstborn, who knows, but, we'll figure out a way to get it done.
And Jenny, what are some creative solutions that you do for lenders to get comfortable?
Sure. So if you don't want to give up the rights to your firstborn, good? Okay. If you don't want to give up those rights to your firstborn to Peter, we actually have a great product that we introduced to the market a few years back called SureBuild. And SureBuild is a tool for lenders. If the borrower defaults, the insurance product will cover the cost overruns of the project to get it built to then take it to market. So a lot of lenders like this tool because it will, basically it's a stick, right, to hold over that borrower's head when they need more capital to bring into the deal. And kind of forces them to do that or to give up the asset because in the end the lender's not going to have to come up with that extra money to get the project done. This insurance policy will. It's backed by Lloyd's of London and I actually just got word that we can do up to $10 million in cost overrun, so 10% of the project, so up to a $100 million project now. And we're finding that this, it's an alternative to the bond, so that pricing drops out. It's similar pricing. It's about 50 to 80 bips. And yeah, I think that it's also useful. We talked a little bit about, maybe someone's getting into the hotel game that isn't traditionally in the hotel game. Maybe they've built a whole bunch of apartments, but now they want to build a hotel. And how can a lender get comfortable with that? And we've seen SureBuild be used as a way for those lenders to get comfortable with that too. So if you need more information on that, I'd be happy to discuss it with you.
Who pays the premium on that, and does the lender require
The
it?
borrower pays the premium on it. Come on, Ryan.
And the lender's requiring it? No?
The lender would require it. It's a lender-held policy. Yeah, so the lender gets all of the benefit. Surety bond, kind of the same thing. It's a better tool though because as opposed to waiting for the bond to get called and your construction project stops. This has the professional services of a construction management company partner that is on site doing your monthly inspections. They did the document cost review. They'll step into the contractor's shoes and keep the project moving forward. So it goes hand in hand with our completion guarantee as well.
Looks like both Alan and Guy have a comment. Alan, you go first.
So there are a number of projects in California that were under construction that they've run out of funds. One area that has a lot of those is Coachella Valley, and the city of Palm Springs actually went in and demolished a hotel that was partially constructed.
Wow.
So the insurance would definitely be a help, but we're finding that a lot of those projects were under budgeted, and then the timeline and the cost of labor. I just think, and as Guy said, not only the construction loan, now when you've got to get the takeout financing, that's probably where we're seeing the most amount of distress in California.
I've had projects go, I've been doing this so long. I've had projects go south, and because the budgeting wasn't done properly. Today, lenders are smarter. They vet these projects very carefully. They hire companies like this one like partners to vet the project and look carefully. They need to do that. The other thing, so usually and they have fund control, so they protect the dollars going out, because sometimes the GC takes the cash, pays its fee, pays its other projects, and runs away. Not all GCs do, but we've had that happen. So you have to be careful there. But the real issue is that it's never just 10%. It's always more. We've had $20 million construction projects almost end up double. And the other problem is that when the bonding company or the insurance company comes in to use their contractors to finish it, they're not going to have the best people. Hotels can be very specialized. I mean, you have to really think through that policy carefully before jumping into that. That's at least in my view.
Yeah, absolutely. So with the SureBuild product, you're also getting all those professional services. So the same engineer is looking at doing the fund control, right? So doing the monthly, doing the budget review on the front end. So that's part. The idea is not to get to the foreclosure stage, right? But it is a good thing to be able to hold over their heads. And usually at this point, if things are going that awry, maybe there's a capital injection from the borrower already. So hopefully that extra 10% is really just to get it over the finish line in the way worst case scenario of the world, for sure. That's such a shame that they actually demolished something that was half built. That is a shame.
Good thing they weren't Peter's client, or they would have lost their first.
Yeah, and a second too.
They would have lost
I'll take all the children.
So we are getting close to the end of our session, so I wanted to wrap with a lightning round session. And I would love to say each of you could just do a one-word answer, but we all know that's not true. It never happens on panels. So you're going to do a thumbs up, neutral, or down to these questions. And if you're the contrarian, you might be called on. So first question, also keep in mind, no one here, we're not economists here, it's just opinions. So first question is probably an easy one. Will interest rates continue to grow this year? Thumbs up, stay the same, down. Okay, unanimous. Now this one is not a thumbs up or thumbs down. What is your prediction on how many more increases there will be? Just do your number 1, 2, 3. All right, we got a 2, we got a 4, 3. Mostly 2s and 3s, and then 1 4 from Keegan. Why 4?
Yeah, sorry. I just think inflation's been trickier to get in line than thought, and I definitely think we'll see the 3 this year, and potentially a little bit more after, but hopefully not. Hopefully not.
All right, and then I've heard, and we've talked about on this panel, that people are expecting the interest rates to fall again. Thumbs up if you think they will start to fall this year. Nobody. Okay, thumbs down. Okay, great. What about next year?
I want to be optimistic.
Okay, we got some neutrals, and okay, thumbs down. Why not next year? I think that was you. Did you do thumbs down, Joseph?
Yeah, I'm hoping not.
No, I don't think it'll fall next year.
You don't, and why is that?
I think there's just too much money on the sideline, and people are spending. Wealthy individuals still spending. This economy, what is hurting is for those people who live paycheck by paycheck. Let's say interest rate goes up to 12%. Yeah, and I might tell my wife not to buy this and that. Don't go to South Coast Plaza. But I'm still gonna go Spargo. I'm still gonna go golf. But it's the person that live paycheck to paycheck. Yeah, it's gonna have difficulty. Everybody sitting in the panel, so we're gonna do exactly the same. Nothing's gonna happen. So therefore I think the inflation will continue to jump up, and they're gonna keep going at it. Mm-hmm.
All right, last lightning round question. Especially based off of the CMBS hotel debt coming due, do you expect more discounted or distressed hotel transactions to transpire this year compared to previous years? So more, same, less for discounted and distressed this year. Oop, I saw you trying to talk over there,
No,
not
I
use the
don't know
phone.
enough. You know, I'm a commercial guy. I haven't tracked the hotels.
Okay, well, we have 10 seconds to spare, so I feel like if nothing, I'm very timely, which sometimes drives people nuts, but our time is up. Thank you for the panel. I don't know if we do want to do questions from the audience. Craig?
Now we're going to go into a break.
Break. Everyone break.
of us.
Thank
Get
you
me
to
out.
this wonderful panel.